The financial services industry has experienced tremendous change over the past decade. And here to talk with us about the implications of that change is Tony Davidow, author of a forthcoming book titled Goals-Based Investing. Tony, welcome.
Thanks for having me, Bob.
It's a pleasure to have you, Tony. Let's start here with why you wrote the book before we get into all the implications.
Yeah, I think as you set it up, I think the financial services industry is at a key inflection point. We're seeing a lot of pressure on fees from asset managers and advisors. I think there's a fair amount of confusion with individual investors of what is an advisor's value proposition? What am I paying for? What should I expect out of that relationship? And at the same time, I think we've seen a plethora of new products coming to the market, which creates a lot of confusion for advisors and for investors. So I think there's a sea change going on, and those who can navigate and be nimble in responding to the change will flourish, and those who don't respond appropriately risk becoming obsolete.
Right. So one of the challenges and changes that has taken place over the past decade has to do with robo advisors.
Indeed. And Bob, as you and I have talked about quite a bit over the last couple of years, digital advice or this whole robo offering, whether it's robo financial planning or robo asset allocation, I would argue isn't a threat to an advisor. And in fact, if used appropriately, can be a tool that provides scale and efficiency to the practice. But if it's not clear what an advisor is providing to a client may say, why would I pay an advisor a fee if I can get a robo or an algorithm to develop a sophisticated asset allocation program and rebalance my portfolio over time and potentially even do tax loss harvesting? What do I need an advisor for if that's what it is perceived that an advisor is delivering? So I think there is a little bit of this tension where if not positioned appropriately, a robo offering, whatever you want to call it, robo digital advice, could be perceived as a threat or replacement for an advisor.
Right. So the other trend that you make mention of in the book and also in the blog where you outline why you wrote the book is this notion of diversity, equity, and inclusion. And talk a little bit about that.
I think it's such an important issue for our industry. I think, especially in today's day and age with a lot more sensitivity around these issues, if we look at the financial services industry, unfortunately, Bob, it's dominated by a whole bunch of people who look like you and I. It's old white male dominated. And I think the reality is we need more women. We need more minorities. We need a younger demographic, because I think ultimately clients want to find people who look like them. They want to find people who are relatable. You and I both have millennial children, and we've talked about the fact that they likely won't walk into an advisor's office in the same way that people of our generation did. But the reality is it doesn't mean they're not going to make informed financial decisions. They'll likely do it through technology. And I think Robo is one of the responses to that. So I think the reality is advisors need to think about how their practices evolve to look more like the demographics that they're serving. And that is more women, minorities, and millennials.
Right. So obviously in this day and age, the need for knowledge is greater than ever. You write about in the blog the notion of all these new products, whether it's private equity or factor strategies or ESG. Talk a bit about the need for an educated advisor workforce.
Yeah, and I think it's an opportunity. You know, again, all of these changes could feel very threatening for advisors. But, you know, folks like you and I think we've spent our whole career evolving and learning, and I get excited about all the new things coming to the marketplace. I know that it can often be intimidating. So you're right that if we think about what has become commoditized, a lot of the basic bread and butter sort of things have become commoditized. Asset allocation models look fairly similar, but unique strategies like private equity or factor investing or real assets, those sort of things, I think, are becoming much more important to individual investors just because of the capital market assumptions are likely projecting lower returns, lower income, and higher correlation amongst the asset classes. So I think there is a need and an opportunity for advisors to lean in and to say, I need to invest in myself so I can better serve the needs of my clients, whether that's through better investment acumen, whether it's a better understanding of all the challenges with retirement, things that you've written about so eloquently for many, many years, or whether it's just understanding, what are the complexities with high net worth clients, which are well beyond the portfolio. Things like better understanding things like the trust and estate issues, charitable giving strategies. So we need to think beyond the portfolio and really expand the types of capabilities and services that we're providing to our clients.
So it may seem evident at this point, but the book was largely written for advisors of all stripes or advisors of a particular stripe.
Yeah, of a particular size. So I tend to view these advisors who embrace the change and the challenge as lifelong learners. Those are people who have spent the time to get those advanced designations, whether it's the CIMA, the CPWA, the RMA, the CFA, the CIA, whatever it is, they've invested in themselves because they know the best way to serve their clients is to spend the time to really understand these things well and to continue to evolve the way that they think about investing and the way they think about total wealth management, which is well beyond the portfolio. So I think that is my primary target audience. But I think, as I've shared with you in the past, I also believe that there's a real opportunity for a lot of high net worth investors who choose to do this on their own. And I think of many of my friends who are in the financial services industry, and they don't need a traditional advisor relationship. They likely understand investments really, really well. And what they're really looking for is to augment their core competencies with other sort of issues. And you're kind of the expert on retirement. And it's amazing to me that many of my friends were very sophisticated and have made their wealth on Wall Street or working for hedge funds or private equity funds. They ask questions about retirement, basic questions that maybe they haven't really thought about because they've been so focused on their career. And I do think there's an opportunity for the high net worth investor who potentially gets turned up by the industry jargon and not really understanding where and how to seek the appropriate advice. And I'm hopeful that this book actually speaks to them as well.
So one more question about the book before we do a deeper dive on some of these other topics is the title, Goals-Based Investing. There's been a lot written about goals-based investing over the past, say, 3 to 4 to 5 years. Can you give us your definition of what goals-based investing is and differentiate it from other types of investing?
Yeah, so there's a common thread through my book. And again, it's not to suggest that what we've done in the past is wrong, but it is to suggest that what we need to do in the future needs to evolve. So if we think of modern portfolio theory, and I certainly have written about and spoken about modern portfolio theory and the merits of it for decades and decades. I'm not suggesting modern portfolio theory is wrong, but modern portfolio theory has certain inherent limitations, the biggest of which being that all of the math behind it assumes that clients are rational and they'll always make the rational decision. They're always going to pick the optimal portfolio, the right combination of risk return to provide the highest likelihood of achieving their goals over the long run. Well, it sounds great on paper, except for the fact that, as you and I know, and I think most of the audience understands, most clients aren't rational and we're often driven by behavioral impulses. So to me, goals-based investing is the natural evolution of modern portfolio theory, marrying attributes of behavioral finance to really establish the way we should be engaging clients, which is to set up the discussion for what are we solving for? And if you think of a high net worth family, there may be multiple goals that we're solving for. So rather than our goal is to outperform the market, which is never the right and appropriate sort of strategy, maybe the goal is I need to think through my child's college funding, or I need to think through, I'm going to be retiring in 20 years. How do I provide the lifestyle that I'm comfortable with in my retirement? So we need to begin by engaging clients to understand what are the various goals that we're solving for, and how do we set course of a strategy that ultimately gives us the highest likelihood of achieving all of those goals. And I think it's important to think about them in terms of goals, because ultimately, then what we're doing on an ongoing basis is reporting back to our clients, how are we doing relative to the goal that we've established, a 20-year time horizon to save for retirement, as opposed to, did I outperform the market the last quarter or the last year?
So, Tony, as I think about folks who might be inclined to read this book and who may not be familiar with you and your background, in the blog, you talk about your many years in the business, and you talk about meeting folks like Fama and Merton and Thaler and the experiences that shaped you and that led to the creation of this book. Talk a little bit about that.
Yeah, no, I've been very fortunate. I've met a number of Nobel Prize laureates, and I'm always in awe of their genius. But I would say I've also learned a lot from meeting with clients directly, and I would say that I probably learned as much from clients as hopefully they've learned from me. And part of it is just to understand, regardless of the dollar size. Regardless of their position in life, I've had the good fortune of dealing with billionaires and CEOs and athletes and entertainers. The reality is we're all solving for similar sort of issues, right? A client who has accumulated an incredible amount of wealth is still concerned about their family and their values. And maybe they have more complex sort of issues that they're solving for. But they think about the same fundamental issues that you and I think about is, are our children going to be okay? Have we instilled in them the right value system so they can carry on the family legacy? They just do it in a slightly different way. So I've been very fortunate to be around some great academics, but also to think through from a client perspective and an advisor perspective, how do we help clients achieve the best outcome over the long run? I think sometimes we get so enamored and we're in awe of our clients and what they've accomplished in their life. And sometimes what we don't realize is what we have to offer, our area of expertise, where we've developed our own core capabilities. That's of tremendous value to a lot of these individuals.